Dividends can mean cash in your account every single month. Hey, what's up everyone? My name is Joel, and today we're going to be talking about one of my favorite things. What are dividends and dividend stocks? Now, a dividend is a cash payment that you get from a company that you own shares in. You get these payments directly into your brokerage account, usually every 4 months or every quarter, but there are some companies that pay a dividend every month. Companies have set percentages that they pay out in dividends, ranging from below 1%, with some companies paying even over 10% of your total investment in dividends. When you look up a company, it'll actually say if it pays a dividend and then what that dividend yield is if it does pay a dividend. And that just means what percentage of your investment are you going to get back in the form of a dividend. So after you make that initial investment and buy into that company, every quarter or every month after that, depending on their schedule, they're going to be paying you cash to own that company. They do this to incentivize investors to invest in their company, but also to reward you for being a part owner in that company. Think of it as your cut of the profits. Now, some investors do argue that because these companies are paying out these dividends, giving out some of this capital, that it hinders their growth and can even make it harder for them to survive in a down market. But if you go and look at the S&P 500 and break it down into 4 separate categories, companies that pay the highest percentage of dividends, the second highest, the lowest percentage, and companies that don't pay dividends at all, it's actually that group of the second highest dividend payers that has seen some of the most growth in the past 20 years. Now, that's just an example within the S&P 500, but it is true that just because a company pays dividends, that doesn't mean that it's not also going to have growth. So that capital appreciation, that growth of that company, you're going to get that as an unrealized gain in addition to the realized gain of your dividend payment. A dividend payment is a realized gain because that's actually money that you're getting guaranteed when that company pays dividends. Unrealized gain just means that the stock price is going up, so you could sell it at that higher price, but that gain isn't realized until you sell it. But those two factors, or those two type of gains, do work together for your investment. And what's cool is those dividends aren't necessarily as volatile as that stock price. Many companies actually increase their dividend every year. Lowe's, for example, since it's been a public company, has increased its dividend payment every year, and many people believe that's why that company and that stock is so successful. And the stock price has been doing well, and the company has been doing well because it's been able to attract those investors and have a solid business plan. Now, many wealthy people actually just live off of their dividends. They have enough money to invest that they can take that 4% or whatever they're getting on that dividends and survive off that money. Now, that may sound like it doesn't apply to you, but actually it does. Most brokerages have dividend reinvestment programs where instead of you getting that cash payment, you actually just get more shares, even partial shares of that stock. So then that creates a compounding effect within your brokerage account and within your ownership of that company. So in 20 years, if you invested $500 a month and you were getting 15% on your money, I believe that's nearly $800,000 that you would have. Then you could take 5% of that, and that's still an additional $40,000 you would have a year as an income, or even to supplement your regular income. And what next level investors do, if you're getting that 4%, they'll actually just take 3%, have that be their cash flow, their cash income, and then that remaining 1% is still compounding on their investment. So you're never actually touching that principal of $800,000, and you can see how this can be passive income. Because if you did have a large amount of money to invest, or you waited and let your investments compound until that was a large amount of money, you can then withdraw on those dividends and have that be an excellent source, and in my opinion, a really easy source of passive income. Dividend investing right now is actually my favorite kind of investing. I'm trying to pump as much money into my dividend account as I can and let it grow for 15 to 20 years, and then take those dividends out and have that be a supplement to my income. And then I will still have that principal of however much money it is to save for retirement or whatever. I hope you guys found this video useful and interesting. I've decided that I really do like making YouTube videos, so I think that I'm going to try to pump out 2 videos a week, either Monday or Sunday, and Thursday and Friday, just depending on how that works out. Let me know what you guys think when you would like to see videos, And if you guys could do me a favor and please share this video, that would be so huge and I would appreciate it very much. Thank y'all for watching, and I'll see you in the next one.